Hello, investors. Today I'm going to talk about the importance of having a process in managing your investments and what could be the outcome for an investor. So, to explain this, I would take the example of quantum long term equity value fund, where we have a seamless process in terms of evaluating and analyzing companies. But I would be focusing on two key aspects of this journey, which is buying and selling stocks. To buy a stock for a first time buy into the portfolio, the stock should have an upside potential of at least 33%, which means so if a stock, as per our research, has an intrinsic value or a fair value of rupees 100 on a 2-year forward basis, the stock should be available at least at rupees 75 as of today. So what that means is if our thesis works, so when the stock moves from 75 to 100, you would have a return of at least 33% over a 2-year period of time. There could be actual numbers could be marginally better than what we estimate. In that case, the returns can be slightly better. So even the reverse could be possible. But more or less, what we have seen historically is in terms of estimates, the actuals have more or less panned around what we estimated over long periods of time. So coming to the second important aspect, which is the sell discipline. So when a stock reaches our intrinsic value estimate, so in this example, when the stock reaches 100 rupees, we would start trimming those positions, and that would help us in realizing those profits by the way of stock moving from our buy limit of rupees 75 to rupees 100. So by following this process, what we ensure is at every point in time, a stock in the portfolio would have an absolute upside at every point in time, which may not be the case with the market or the broader stock universe. So if you end up holding an expensive stock, even after it crosses your sell limit, there is a risk of higher downside than the market. For instance, if I'm holding a stock at 120 rupees, and if I believe the intrinsic value of that stock is 100 rupees, so whenever that market realizes that disconnect, there is a very high probability that the stock could move from 120 to 100, and therefore that could be a drag on your portfolio.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.